A lot of algorithmic traders think optimization is the magic key to unlocking millions and millions of dollars in profits. And today I'm going to explain why it's not the holy grail many people think it is and how to overcome them. Hi, if we haven't met, I'm Lisa, a data scientist turned algorithmic trader. Now, I do use optimizations when I do development of my own trading strategies. It is the core concept in one of my main workflows. But what I don't do is grab some random robots online and optimize them and hope the settings that I find are going to work on a live account. So this is what I've seen a lot of people do. They find a random free expert advisor online, they take it, they optimize it, and they trade it live. There are two huge assumptions people are making when they take this approach. The first one is that the strategy itself is optimizable, and the second one is that the logic itself is good. Let's take a look at the strategy is optimizable. For this example, I'm going to take one of the strategies that I set out to the members of my Algo Lab community a while ago. This one is for 26,168, running on the 1 hour time frame on the US Japanese yen. And the logic is fairly straightforward. We're using a standard deviation for our long and short entry. And for our exits, we're just using a simple profit target, stop loss, and trailing stop. Let's go ahead and optimize the standard deviation, the profit target, and the stop loss. Today is 2025. Let's pretend that we're going back 2 years with our data. So we'll start with 2023 and let's choose this period to do our optimization. And when we check all the different possible values for our standard deviation, our profit target, our stop loss, we find that the best value is 21,227 and a stop loss of 183 works best in this 2-year period. What are we going to do? We're going to take this and trade it live on our live account. Are these settings that were found during our optimization process, is it going to work and make profits for us in live trading? We don't know, not with the approach that we've taken so far. There are so many unknowns with this approach. Personally, I would never risk real money with this approach, but there are so many people online who think they are algorithmic traders just optimizing and then trading on a live account. There is a much better approach called walk forward optimization, which will give you much more confidence in this approach. So again, we're in 2025. Let's go back instead of just 2 years, but let's go back up to 2019. So we've got 2 years of data here, 2019 and 2020. We're going to take these 2 years of data, we're going to optimize it, find the best settings, and then trade it for 2021. So the red here represents our optimized data and the green represents our actual trading results. So let's do that and repeat the exact same process for the year after. So now notice the next bit, our red, which is we're using for our optimization, it overlaps the period that we used before. So we are now optimizing for data from 2020 and 2021. We find the best settings that work during this 2-year period, and then we apply that and trade it on a simulated live account for 2022. And then we repeat that process exactly the same again with the next year, again overlapping some of the periods. 2021 and 2022 are now our in sample, and we're trading with those settings for 1 year, 2023, and we'll repeat those process every single year until today. This process will give you so much more confidence that if you take a strategy, if you optimize it and then trade those settings, it will tell you if that approach is going to work for this particular strategy. If you're a good trader, you might want to check out Darwinex Zero. If you're not familiar with them, they are a platform designed to reward good traders. You can get a simulated 100k account to trade and earn money from your trading. Currently, there are a total of 4 different ways to make money in Darwinex. In silver stage, you can get between 30 and 375k in allocation, and you can keep it for 3 months. In a gold stage, where you can receive up to 500k in allocation and keep it for 6 months. Then there's investor capital, which can get into the millions and millions of dollars. And then there's the 100k permanent allocation, which comes in 2 different flavors, the instant allocation and the performance-based allocation. All these 4 different options are stackable, so you can get silver, gold, investor capital, permanent allocation, all in the one account. I've personally been trading with Darwinex for a year and a half. I've received multiple payouts from them and made it to Darwinia Gold. If you're a trader and want to make some extra money, then I have a discount code below if you decide to sign up. Thanks Darwinex for sponsoring this video. Let me show you this in action. I'm going to be using a software called Strategy Quant. There's lots of other different types of software that also offer the function of walk forward optimization. This is just what I use. I've gone and already run the walk forward optimization, and this is what the results will look like. So on the left here, I've got my in sample, which is the red that I showed you before. So it's doing optimization from 2012 to 2016, 4 years. And then we're trading for a period of 1 year, which is our out of sample. And you can see our profits in the optimized bit was $2,000, and we took those settings, which are shown on the right hand side here. We have a profit target of 201, a standard deviation of 41, and the stop loss is cut off on the screen here. We used those settings and we traded it in fresh data that the strategy has not seen before, and we made a profit of $596. And that's exactly what this chart shows. So this green bit, it's the colors are flipped as to what I showed you before. This green bit is the optimized area. So 2012 and 2016, we ignore this area of the chart because that's optimized. And then when we traded it, this area here between the 2 red lines, that is our live actual trading results. And we're going to repeat the process again. Now at the bottom of the screen, you can see this green bar. The green bar has moved a little bit. So now our in sample period is 2013 up to 2017, and we're trading here for another year. So these settings could be totally different to the settings that we used before. And in 2017, it can't really tell, looks kind of like a break-even year compared to the first year, which was profitable. Let's go forward a few more instances. You can see in the next bar, this one does look slightly profitable, and if we continue slowly, you can see eventually over the next 10-15 years, the strategy is overall profitable if you take the optimize and use those settings approach. Now, if you just look at that chart, it looks amazing. The results are fantastic. So surely walk forward optimization works for all strategies, right? Unfortunately, no, it doesn't work like that. So here I've got another strategy. I've got running it on the Swiss franc Japanese yen, and the first part in blue is the area of the chart that we've optimized for. We've found the best settings, and then we've traded it live. So we're looking at the period between the 2 red lines, and you can see it is going down. So the settings that we found that worked best in historical data did not work when we traded it live. What if we continue that? Maybe it was just a bad year for this strategy. Let's go forward by 1 year, and we can see again, this one looks to be a break-even year. Let's continue the process of optimizing, taking those settings, and then trading it on a live account. You can see overall, this is a losing strategy. For this particular strategy on this currency pair, on this time frame, we cannot just go and optimize it and use those settings and assume that those settings will work in live trading. And this is what the chart is telling us. So not all strategies are optimizable. Next, let's look at the second assumption, that the logic of the strategy is good. I've got here an example strategy that I created using Strategy Quant. The backtests look pretty good. I've created using the best practices of algorithmic trading, including small in sample, large out of sample, Monte Carlo, a whole bunch of other tests. And so this one was built correctly. Compare that to this strategy where I built it incorrectly. All I did was grab all the data over the past 10-12 years and asked Strategy Quant to create a strategy for me. I did not include the best practices. I didn't do any robustness testing. So probability wise, this one almost is guaranteed to fail in live trading. But there is no way for me to tell just by looking at this backtest report if it was built correctly or incorrectly. The thing is, if I had built this incorrectly and I used all the data, I just went and optimized it, sent it off to the internet, someone else came along and did walk forward optimization on this incorrectly built strategy, the walk forward optimization would look fantastic. It would look amazing because I've already done optimization on this particular strategy. That's why I don't find random strategies online and go and optimize them. I build them myself so I know that it was built correctly. There is one exception to the rule though. So if the strategy was published at least 4 or 5 years ago, then I know the past 4 or 5 years, the strategy has not seen that data. And if it performs well in the past few years, then it might be something I would look at. Now today I briefly touched on the topic of walk forward optimization. If you want to learn more about this really cool optimization method, then watch this video right here. Thanks. Bye.